what tips would you give to people thinking of trading the Forex markets?
Well, I would say the first thing to bear in mind about FX is sort of understanding the basis of how they're priced. Always bear in mind that sort of it's the first name currency is the one that you should think in terms of. So if you've got the euro against the US dollar, if you're looking for the euro to fall in value, then you are going to be selling the euro US dollar pair. If you think the US dollar is going to be going up in value, then of course that means the euro is going down in value. So it's exactly the same thing. So if you think the US dollar is going up, then the euro is going down. So you're going to be selling that first name currency. So always think in terms of the first name currency. Now that's a basic. But if you're serious about trading FX, then you need to sort of get a good grounding in fundamentals of the currencies. That means looking at the countries. There's some great sites out there. Trading Economics is a great one where you can get sort of in-depth data covering all aspects of the individual countries, about GDP, about inflation, about this, that and the other. So go and have a look at that. And then really, currencies are one. I think they're great for trade, great for technical traders. Because there is so much volume in currency markets, charting works very well, technical trading works very well, levels, trends, all these things sort of play into currency markets. It's not the same for every currency, but you can see times when a particular pair is just trading in a range for quite a length of time, or when it's trending in a particular direction. So I'd say, get out there and have a good look at the charts.
You've obviously run into trading accounts, which are the successful traders. Are these the one running tight stops, the ones who run their winners, or are these the people who are heavily capitalised, the ones who understand technical analysis?
Well, it's a real combination. I think that successful traders, yes, they do tend to be well capitalised. They also know that taking losses is a part of trading, and they're just sort of prepared to go with that and live with that and bounce back from that. But also going into that is the fact that they limit the losses. One particular loss isn't going to hurt them too much. It'll be a nuisance, but it'll be easily forgotten. And that's something that successful traders really, really work to. So they're stripping the emotion out of trading as much as they can. It's very difficult to do, but whether they do that through having particular strategies, looking back over their old trades, winners and losers, seeing where they did something right, seeing where they did something wrong, and working always to get that consistency. So yes, having a good amount of starting risk capital, but then and whether this be over, and it's so often it's just down to experience and over time. Yes, you can sort of learn stuff from other people, but you can only sort of see if you're capable of taking those lessons on board and actually sort of using them when you trade for yourself. And for some people, it's just not for them. For some people, to watch your position going offside, even if you know that you're prepared to risk so much on a particular trade, but even if you haven't lost that yet, just seeing a trade sort of going into negative territory can be too difficult to actually to deal with, and it's to cloud everything else. So you've got to take the emotion out of that. You've got to sort of think of your risk capital as your risk capital, and be pretty dispassionate about it.